Today, we are going to talk about the three biggest myths in option trading. And I'm so excited for you to join us this week, Mike, because you are the options expert. And I want to just talk about, first of all, the number one biggest myth that I hear in options trading is that options are risky. And I disagree with this, but Mike, I want to hear your viewpoint on why options are actually less risky than stocks if you know how to trade them.
I do believe they're less risky than stocks when we talk about dollar terms. So if I buy a stock, let's say I buy a stock at $100, technically I can lose $100 on that share. I know that's rare, but it's not rare to see a stock gap down 10 or 20%. In this case, $20 a share. If I buy an option, it's going to be priced maybe somewhere between $2 and $5. So my risk is $2 to $5 per share, not that downside gap of $20. I think it's much safer when you look at it in those terms.
Mm-hmm. Interesting. And, if you buy that $100 stock, we've seen instances in the past with WorldCom and Enron. There are times when that $100 stock goes to $10 and $5 and even $0 faster than you can think. And of course, you can lose everything in option, but what you're saying is you're only taking a $2 or a $5 risk. You're not taking a $100 risk on that specific stock, correct?
That's correct. Options prices are often close to the stock of a small cap stock. Mm-hmm. You're only risking a few dollars a share, and you know the risk before you enter the trade with an option. You can set your risk to be precisely $300 on this trade, or precisely $100 if you want to be very risk averse.
Interesting. So that brings up myth number 2. And this is something I've heard over and over again. And it's the fact that the large majority of options expire worthless. And what that means, if you're buying an option, there's like an 80 or 90% chance, from what I've heard, that option could go to zero or will go to zero at expiration. And Mike, you say you've seen some studies that have looked at the data, and this is not true. Could you please explain to our viewers why 90% of options don't expire worthless?
Well, that study does say that, and it kind of says that, let's say. I actually found that study, and then I went and found the source data for it. And all that study looked at was how many options that are held on expiration day expire worthless. It ignores all the options that were closed or bought before the expiration date. So I went back, I pulled the exchange data from the years of the study, I recreated the study, and what I found was about 6% of all options contracts expire worthless. It's one of those studies that's widely quoted, widely misinterpreted, and completely useless.
Wow, so you're saying there's a little bit of fake news here with this study, that they kind of fudge the numbers to serve their purpose, huh?
I think it's just misunderstood. I'm not sure anybody's trying to be deceptive, although maybe that's an overstatement. I do think perhaps some people use that as a scare tactic. Don't do options because everyone's going to lose their money. The truth is a very small percentage of contracts expire worthless.
Mm-hmm. And you use a term that some of our viewers might not be familiar with, this idea that a contract is open and closed. Could you give us a little more clarity on what exactly that means?
Just like with the stock, you open and close that trade. So when you open, you buy. Mm-hmm. And if the stock goes up, you close it at a profit when you sell. Same thing with options. You buy, and if the price goes up, you can take your profit, sell it, close the trade, and look for the next opportunity. Or you could sell it at a loss, or you could allow it to go all the way to zero, basically maximizing your loss. And there might be a reason you want to do that, but you don't have to do that.
Interesting. And I think that highlights another problem that a lot of investors have. And this brings me to myth number 3, the idea that options are complex. And of course, there's complexity in everything. There's complex strategies for people who buy cars and flip cars, or people who flip houses. But in reality, are options a lot simpler than people really think? And is there this misconception that you have to be some type of math wizard to understand how options work?
Yeah, I think that's the same is true with stocks. You can make stocks much more difficult, and to value a stock, you can build a net present value model and do all kinds of math. You can do the same with options, or if you think a stock's going up, you could simply buy a call. At the moment you do that, you limit your risk to a certain dollar amount. You have unlimited upside, and because the dollar amounts are small, you tend to see a lot of option trades make 60, 70, 100% or more. And that's the upside of it. They can be complex. You could buy this leg, sell that leg, do all kinds of other stuff, but you don't need to. You can just make money simply.
So you're saying, let's say I want to allocate $500 to a particular stock. And, let's say the stock's trading at $60 a share. If I buy $500 worth of the stock, my downside is going to be a lot more than if I allocate $500 to the option trade, correct? Or I get more leverage, or how exactly does that work?
So in both cases, your risk could be exactly the same. It's $500. But if the stock moves up by 10%, your $500 goes to $550. Your option trade, your $500 is going to be worth at least $660. So you have made $160 on 500 as opposed to 50. And the math can get complex to explain that. But in simple terms, your gain is 3 times larger for the same price move in that example, and your risk is exactly the same. Given that, why wouldn't you want to at least look at options and see if they're right for you?
Yeah, that's a great point. So if people were interested in learning options, what is the easiest way? I have a TD Ameritrade account, or if you have an E-Trade account, are they available on those platforms? What is the first step to start trading options?
Yeah, I think the first step is to go to your broker and watch the dozens of videos that they have on what options are and how to trade them. If that's not enough for you, go to the exchange. The CBOE, the Chicago Board of Option Exchange, has hundreds of videos explaining what they are. Then paper trade. So your broker, if you're at TD Ameritrade, will give you a paper trading account where you enter the trades without any risk at all. You just learn the mechanics of it, and you see the potential with no money at risk. Once you know the mechanics, start trading. But I think that we forget trading is a skill just like any other skill. Baseball season is delayed right now, and a big factor is the players need time to brush up on the fundamentals. They're going to go to spring training. They're the best in the world, and they practice. Individual investors are not the best investors in the world, and they think they don't need any practice. I think that's a big disconnect, whether it's stocks or options.
Oh, that's a great point, Mike. It sounds like you can kind of learn to drive in a simulator and not actually have to take your car on the road yet, risking crashing into a telephone pole or a tree with these simulators that are offered by TD Ameritrade. But that has been really, really informative, Mike. We've debunked the 3 biggest myths of options. Mike, I want to thank you for joining us this week on Market Insights.
Thank you, Ian. It was great to be here.
Great to see you as well. And for our viewers, if you like our content, please remember to give us a like. It helps other people find our videos on YouTube. And if you haven't subscribed yet, why haven't you subscribed yet? Hit that subscribe button. Any comments, please leave them down below. I'm sure Mike and I would be happy to get to them in a future video. I'm Ian King for Smart Profits Daily. Have a great week, everyone. Thanks for joining us.